I'm not alone here, am I? Mic dropped out, yeah?
Yeah, Fathom closed the whole thing. Sorry for the inconvenience.
Mike,
Right, we're ready. We're ready when you're ready, Mike.
Uh-oh.
There he goes.
Mike, you have your microphone on?
All right, was I muted?
Yes, you were.
Okay. All right, shall we start again? Sorry, everybody. So welcome to Snipers Monday morning. Stock, crypto, and options trading has large potential rewards, but also large potential risk. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Don't trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Please feel free to read the balance of this at your leisure. Let's go in and talk about the markets, okay? So I'm going to hop into, actually, let me give you the futures again. These are the future symbols. Tom's Tools will give us the look at the market as it was on Friday. So if we want to look at current market conditions into the open and even till 10 o'clock, 1 hour after now, we have to use the futures to get a feel for what is actually going on right now. So I'm going to do that. And I'm
They're down slightly, Mike.
What?
They're down slightly.
Okay. Yeah, I was just going to go look at that right now. So let's take a look at the E-minis, the S&P 500. And you know, here's the surprise that we've all experienced. I thought 4,000. I thought 3,800, 3,900 would hold. Then 4,000, 4,100 has been breached. We are now slightly above that level, although coming down. Now the futures were flat a while ago. It's now they're down 31. So what I like to do when I start the week is I start to digest some news, and you know there's a lot of sites. We talked about this, but you know, one of them is CNBC. It's a nice consolidated view, and usually the big news nuggets are right on the top of the screen. So futures fall to start. Okay, Treasury yields are climbing. Fed officials are pushing back against market rally and recession talk. They're saying there's no recession. What recession? Home prices cooled off at a record pace. So this is you know, from here, sometimes, often, usually, actually, there's some opportunities that may show up on the board. We are in the earnings season, so we've got some companies, slower growth for cable companies. That makes sense if you consider that there's, you know, we have 2 years ago, I heard of Yahoo TV and then Hulu and Roku and Disney Plus and Apple Plus, and so the cable companies are under pressure, and that makes perfect sense, right? They provide internet, but you know, the Comcast of the world, which is one of the larger cable companies, are probably under some pressure, and so there's an opportunity for us, you know, given what we know about the consumption of media, TV, movies, and things, that we could take a look at Comcast, CMCSA. And I'll put that on my list. I'm just going to scour the news. Well, I wouldn't even say scour. Hey, Deshaun Watson's reportedly suspended. There you go, Larry. Here's your NFL news. I don't know why they picked him up, man. I mean, that was coming. Here's what the Fed says about recession. Are we in recession? It doesn't matter. I'm focused on inflation. Okay, but recession is a good possibility, a big possibility, if the Fed overcorrects. Remember that analogy I talk about? It's like the imagine an oil tanker in the middle of the ocean. you know, they take a while to steer. They're so heavy, they have a lot of momentum. And so to steer them, you have to start steering them, you know, well ahead of before you hit the rocks. Or if you want to go into port, you cut the engines 20 miles out because it takes that much time for the momentum to shift. And so the whole idea of interest rate hikes is to take the inflationary, you know, the inflationary course, stock the economy or the tanker is heading towards rocks, and to steer it quickly because inflation is so high, the Fed has to really be aggressive on interest rate hikes, oversteering potentially into a recession. So that's always, you know, nothing has changed. It's the same information. Inflation, recession, and interest rate hikes. Oh my, it's still there. It hasn't changed, and yet the market rises. Okay, so we've had earnings from Apple, Microsoft, all the tech companies announced last week. We've got earnings coming up this week. I want to take a quick look at the earnings count, the events calendar this week. So if you ever want to look at the events for the week, it's always a good idea. Just do a Google search, economic calendar this week, and it's in different forms. This is the one I use. I know it, and this is the one I use for Market Watch, and then you can get a look at what's in store for us in terms of announcements this week. So we got jobs, rental vacancy rate, homeowner vacancy rate. So there's some real estate market news coming out. We've got the services PMI, factory orders, jobless claims. So jobless data is coming out this week, non-farm payrolls. So what happens in an inflationary environment is that jobs get cut. Companies can't afford to pay for their employees, all their employees, so they start cutting people, and that increases jobless claims and unemployment and all of that. So Thursday, Friday of this week, we could see the markets take a move. Now, I was also looking to see in CNBC if I saw a reason for the futures now being down, you know, 0.5 percentage point roughly across the board. And I don't see any news here. I don't see anything. You know, I checked about an hour and a half ago, and there was nothing there. I don't see, and again, an hour and a half ago, the markets were flat. Now they're coming down a bit. So I don't see any really big news on why the markets have changed course a little bit since, you know, almost setting, you know, higher open, and now we're heading down. We're about 0.64% down on the E-minis. So 4,100 is a key level, and we're still above it currently. That could very well hold, and you know, it would be very rational to assume there'll be some pullback after this stunning July run that we've just had. So across the board, let's take a look at the NASDAQ/NQ. Same pattern. Let's look at the Dow/YM is the Dow. Same pattern, same pattern, same pattern. Sometimes the Russell 2000 sometimes offers us a different picture, but in this case, same picture. So slightly down open looks like, yeah, I don't know. We'll see. I'm dubiously bearish, not dubiously, cautiously bearish. We should come down from here. We should, but we may not. We shouldn't have done this, but we did. When I say we, I mean the markets, of course. So there we go. That's the four markets. Let's take a look at oil. Oil is under pressure, right at the 200-day average on oil. This is the futures for oil /CL, and currently we are just below the 200-day average. U.S. natural gas retreats from massive July rally, so a little bit of profit taking on natural gas. Oil prices dropped 3% as global economies struggle. So there's the world economy. One thing about China is in the news as well. Crude oil prices are lower on weak China and European PMI activity. So contraction in those economies, demand for oil receding, at least in Europe and China. Hey, Dave, Your gas prices, petrol prices in the UK are pretty astounding, aren't they? I thought I saw Dave on the call. Dave? Okay, he's not there. Let's look
He's
at
got his
gold.
mic on, muted.
Hey, Dave, if you want to, maybe he's getting a tea or something.
I'm sorry. Were you trying to talk to me, Mike?
To Dave Smith, yeah, who lives in England. Okay. All right. Oh, well, let's look at gold. So gold is on the rise. I'm feeling pretty strong about gold. And let's talk about risk off a little bit. Remember on the hedge fund call last week, Paul was talking about a trade on gold and silver, and we noticed how gold and silver had popped up along with the market, along with a US dollar that hadn't weakened that much. Now the US dollar has now since we were down a little bit, but gold and silver were up big. Let's look at SLV from last week. Look at that pop up. That happened, and the US dollar did not get stronger in a corresponding fashion, and then gold did the same thing. So gold was up, and then bonds are also up in the face of rising interest rates. Let's look at the /ZB. So look, bonds are strong, gold is strong, silver's strong. The markets are, we could be topping. I got to be careful about self-fulfilling, because I feel like this market should drop, and I want it to drop, which I got to watch out for. My human emotions kick in, and I guess my self-righteousness kicks in. I want to be right. I want things to be normal, like they normally behave. And so all of that's in there. And so at the end of the day, we got to trade what we see, not what we feel, and sometimes not what we think should be happening. So that's kind of that is the overview there. Let's look at Bitcoin just quickly. Bitcoin has hit 2,500 and is down a little bit today. One stock that I'm interested in, and we're trading this in the hedge funds side of the house, BITO, is dancing with 15 right at resistance. And if Bitcoin comes down today, so will BITO once the market opens in 15 minutes. So that's a general feel. A couple of stocks that I got my eye on. ROKU. Yeah, we love train wrecks. You get a streaming company that gets hammered. It's probably going to go sideways. I like this for a balanced butterfly. We'll talk about this one tomorrow. But all of you on this call, pretty much all of you are also in the hedge fund group. So I would have this on my radar for a balanced butterfly, just like we did with Snapchat. This is what can happen when companies gap down on bad news, in this case earnings, they go sideways. IV elevates, stock goes sideways, IV drops, time happens, and the butterflies just eat that up. I've got a trade on Snap that's doing really well. So ROKU, Snap. There's a few others. If anybody has anything they're looking at, please bring it forward, and we'll talk about any stocks that you are looking at. Apple, strong earnings, big move up last week on earnings. Now Apple's above the 200 for the first time since, 2 months or so ago, since May. So that's about May, June, July, 3 months. Apple has been below the 200, now above. Pre-market, Apple is right at 160, which is super duper strong support right now on Apple. Now, would you go bullish on Apple right now in this market? I don't think so. I would be very leery. Maybe a bullish broken wing butterfly for sure. Intel. It's another big earnings announcement last week. Intel got spanked, taken behind the woodshed, and beaten for bad earnings, or disappointing earnings, I should say. Another candidate for a butterfly, a balanced butterfly, or even if you're suspecting a move up. Let's see, if Apple cracks the high of the day here, you might see a gap fill. Currently, Apple is right at 36.10 pre-market. which is essentially down a little bit from the close on Friday. So let's see what Apple does today. That also could be a really nice balanced butterfly. See, there's lots of opportunities. It's earnings season. You know, one thing I like to do though is go after train wrecks with bear call spreads. Another one that's on the list here that's interesting to me is Newmont. So Newmont is a gold miner, and last week it came down pretty hard on some disappointing earnings. Inflation's getting to the gold miners too, and their earnings were a disappointment. And since the stock has gone sideways, so here's the thing I'm thinking about on this one. Let me write it down so I don't remember to go back to it. What I'm looking at this one is, you know, gold companies. If the price of gold rises, so do their revenues, right? Makes sense. So gold's rising. Newmont got bitch slapped, and it's going Newmont got slapped like Chris Rock at the Oscars. Oh my God. Sorry. I don't know why that's funny to me, but it is. And so, but it's hanging in there. So maybe we could step in and do a bullish credit spread on Newmont, maybe even a bear call spread on Newmont mining. We could also look at other gold companies like Rheingold. Gold is the symbol, or that's Barrick. Similar pattern. And Rheingold is RANG, I think. What is it? RGLD? Yeah, Rheingold. Royal Gold is similar patterns. So the stocks, the gold miners aren't yet rising, even though the price of the commodity is rising. I can't remember what Rheingold is. Rheingold, RANG. That's not it. Anybody remember the Rheingold symbol?
RANGE.
RANGE, that's 5 symbols. Oh, there it is. RANG. Okay, I can't get it up. Can't figure that out. Can't remember the symbol. All right, so gold companies could be something we play with today. And then Matt, before I move on to the portfolio, or if you'd rather talk about it, we can talk about the portfolio. Anything you're saying you got your eyes on? Or Hank?
I don't have anything, Mike.
Okay.
Nothing that jumps out at me because, like you say, I'm getting conflicting information, and I'm kind of scratching my head.
Yeah, I know the feeling. A
I'm the
little
same
bit
as
of
you, Michael.
WTF.
I even like looked at the futures from the weekly just to see like where the 21-day was and all the other stuff. And I mean, they're up against it, but I don't know what, like you say, I don't know what to make of it.
Yeah, I feel a little schizophrenic. Like, what?
So
Has reality changed as we
Michael,
knew it?
last week the Fed came out and they announced the $50 billion money given to the chip makers. Intel being one of them. How does that reflect upon your prognosis with Intel and what you would sell?
Yeah, well, that's a good question. Here's the I'll come back to that question just to kind of wrap up what Hank was saying. But look, here's the weekly chart of the E-minis, the S&P 500, and we've had quite a big correction. And you know,
See the resistance there.
Yeah, if you connect, yeah, I do right here. Yeah, 4,200, 4,150.
Right in there.
Yeah, that seems, and the downtrend is still intact on a weekly chart if you connect the highs here. So we're still within the weekly chart downtrend.
Yep.
And I got to be careful not to try to self-fulfill here, but because, you know, I've been doing this for a long time, so as many of you on the call here, and this market should be dropping. I saw another piece of news. I think it was Citigroup or one of the big companies, finance companies, said that 51% of earnings have beaten expectations, and that's low. I think it might have been JP Morgan. So the earnings have been not as, although there's been, basically the point is that normally more than 51% of earnings are beyond expectations, like good, in other words, and we're at 51%. So points to more irrational exuberance, FOMO, fear of missing out. It points to it, and with all of that, we could still see the markets continue to rise. So Intel, the best way to answer that question, Larry, like the question is, if the Fed is pumping money into, or the government, I should say, is pumping money into chip stocks, what does that do? What?
Yep.
Okay, so what does that
All
do to what?
Careful. Like,
All right, is that you, Larry?
No, that's Hank. That was Hank.
Okay, Hank, did you have something? Okay, I'm gonna keep going. Yeah, so obviously it's money coming into the industry, and that should prop it up, and you can see some evidence there. And so that should be considered in any directional prognosis. Intel came out, their earnings weren't good, and then the government comes out and says, we're gonna give you money to run your business, and the stock stops dropping. So do you want to jump in front of the train and sell puts on Intel in this market, even with subsidy money coming into the chip sector? Yeah, I don't think so. I would probably want to start with a butterfly. You know, the more I trade, especially when markets don't behave like they normally do, the more and more and more and more I love broken wing butterflies and plain old butterflies. If I look across my portfolio, I'm killing it on the stocks that tank with standard butterflies, broken wing butterflies. You know, we put on the calendar spread last week, and the stock went the wrong way. And I was like, man, if I was in a butterfly on this thing, it'd be so easy to adjust it. But calendars don't have that advantage. You know, with a butterfly, no matter where the stock goes, you can shift the risk. But with a calendar, that's not the case. It's just not the case. They're not as adjustable unless you start stacking bulls and bears and calendars coupled with butterflies, which I do want to talk about maybe this week or next week. I want to talk to you about something Matt and I have worked on. Those of you that have been around for a while might have remember this guy named Elo Finoki. Really cool last name, and he would put I'm off track now. He would put a butterfly up top and a calendar underneath, so that he could harness the movement of IV very elegantly. So we'll talk more about that tomorrow. But I have it's complicated. That's the thing. You know, it takes a lot of practice and knowledge of how IV works, how Vega works, and calendars versus butterflies. Okay, I'm going to get back on track because that excites me. This does too. Let's talk credit spreads. I'm going to have Matt. Before I get into some taking a look at the portfolio of open trades and then looking for new trades. I'm going to see do you have anything you'd like to bring to the table for our fine folks?
Yeah, in terms of market analysis, it's actually funny the words that you use about being cautiously bullish. That was exactly my sentiment as well. The market just doesn't make sense in terms of its direction. Now, when we look at, or if we were to look at, I might just get you to turn on sharing for a sec.
Oh yeah.
I just want to go back to my fun-loving Fibonacci lines, just to highlight something, and where we've ended up. I'm assuming you can see TTR.
Yeah.
Fantastic. So where we've ended up, this is the day that Jerome Powell came out, and his comments that are reflected on Thursday were that he said, we will pause, regain control and reconsider. The market reacted. And then we'll remember I also had a downward channel of resistance sitting on top of this bar. And then on volume, the markets continued to rally, and we're now sitting up here against this 50th percentile for Fib, which is acting as a retracement level. Now, do I know where the markets are going from here? No, but I'm very curious to understand where they're going. There's 148 companies in the S&P reporting earnings this week. And with the way that earnings reports have been going, who knows how that catalyst, 148, almost a third of the S&P reporting this week, is actually going to propel the market. We had above average volume last week to the bulls. So like you, Mike, I'm cautiously bullish on where we might go from here.
I'm also cautiously bearish.
Well,
I'm
yeah,
cautious
exactly. It's a matter of,
both, you know.
yeah.
I still think retracement is in our future. There's plenty of people, pundits on the news channels, all saying the same thing. There's bewilderment everywhere, even with those that get paid to run funds and predict direction, and so that's the market. And so with that, let's take a look at our portfolio. Matt, would you like to do that, or you want me to do that? I'm happy to do it either way.
Oh, sure. If you want to do it, go for it. Otherwise, I've got them tracked.
Yeah, go for it.
Start sharing it. Portfolio performance.
If anybody has any stocks they want to look at, please just pop them in the chat or speak up, and we'll take a look. Probably chat's easier.
Terrific. Okay, so the first one I've got is on BP, good old British Petroleum. Now, Mike, I think we have. No, you didn't do this one. This is the one that I had in.
Did we do it in class though? Did we do it in class though? In the sniper?
Yes, yeah, in the first sniper class.
Okay.
So this is the 34-36 call spread. As we can see, the stock has had a bit of a rally and a jump. And where am I at on this? I'm not doing anything just yet. I'm sitting and waiting. I've got my alert set for when I have a close above my short, which is my 34. I am going to keep an eye on 30 though, being a key resistance level to see what this actually does. But I've got break even right up here at prior pivot highs. So at the moment, I'm just going to let BP run. Oh, and we're off to the races.
Love that sound.
So that's the BP trade.
I'm looking at a stock chart on Thinkorswim. Let me grab. Well, you could show it too, but it's at the 200-day average. The 50 is about to cross beneath. Oil's down. BP's down. And you got super mega strong many resistance levels. You got the 200, the 50, 30.
I can show that right here. There you go. So this is what Mike's referring to. We've got the 200, the 50. This is where we had that run. And here's where BP's just opened, $29.01. So it's had a little bit of a drop on the open this morning. And there's the alert that I was referring to at 34.
Let me make a point, Matt.
Sure.
You know, all of you have been coached in the three-phase process, 100 back tests. Without fail, people that do that work over a balance of time, a wide range of time, normally generate 85 to 90% wins, and the average profit per trade is in the 10, 11, 12% range back test. And then there's a live paper trade, live simulated trading, and the results there are generally good. And then all of a sudden, when we get into a live environment, people start wanting to adjust sooner than later. What I want to throw out there is, let the data guide your process. So it's natural when money's at stake for us to want to avoid losing money, and the rules go out the window. And so you don't want to over adjust these things. I mean, you could literally you should follow the same rules that you've done in the back test with the real money that you're putting at stake. And I also realize that from my own experience, that when you do that, there's emotions that kick in. And then all of a sudden, all that data you have and all that proof that it works, it goes out the window. And so on this trade here, and Matt said it too, wait until the stock gets you in trouble. You got plenty of resistance levels. You've got a methodology to batten down the hatches and collapse the risk. So just don't over adjust. Let the data and the statistics and the probabilities do their work and stay the hell out of the way, And if you haven't back tested the batten down the hatches, then guess what? go back and back test it so that you can trust it. And then just let the thing work. Let the rules rule the day.
Well,
Right,
I think
Matt?
one of the biggest, absolutely. I mean, one of the biggest learnings that I had is through all the back tests I did. I used to annoy Jay because I'd always emailing him, asking him for more storage on TTR, which I couldn't get. So I had to export my back testing. But it was just one of those things that I learned so much through that process. And look, I'll be honest, it's not a system that we teach here, Mike, but as you well know, one of the biggest systems I struggled with, which has become one of my favorites, was calendars. And I persisted at that. And I reckon I got somewhere up to 1,000 back tests. And it's so invaluable to solidify how the system works. What does an adjustment mean? What does it look like? When should you do it, etc. So if you can do your back testing and you can make the time for it, I strongly encourage you to do so, because I can assure you that without it, I doubt I'd be in the position I'm in today.
Yeah. Yeah. I mean, I'll echo that. I've done so much back testing. And I like it. I think it's fun. I enjoy it.
Yeah, I do give myself a little bit of a kick when I improve the results over the last data set. Anyway, I digress. Let's get back into that portfolio report. What do you reckon? So GM's the next one that we've got on our list, everybody. Now, GM, we've got a 40-42 call spread. At the moment, again, we know GM has taken a run. It's correlated to the S&P 500. From charting perspective, we can see we have had 3 days of close over the 50. And we can see here, historically on earnings, also we've had a run down, we've had a little pop after earnings and a drop, a pop and a drop. So from a behavior in this stock, this is normal behavior, but the market we're in is quite unusual. Now I've got my alert, just to the point that Mike and I were talking about, I've got my alert set here at 40. And what this is going to do is it's going to trigger if I either get traded through that 40 on a daily range, or if I get a close, that's going to be my point of adjustment. That's how I run them. If I end up getting in the last hour of the day and I'm still through 40, I'll adjust this. What am I going to do? As Mike says, I'm going to batten down the hatches. I'm going to drop this 42 to a 41 to squeeze the risk out. And depending how much time's left in the trade, I may convert this into a butterfly as well. But keep an eye out and I'll let everyone know if I'm going to make that adjustment.
And when you start seeing a stock go against the direction you anticipated, then start looking for bullish broken wing butterflies. And that trade short term, don't worry about matching up expiration dates, short term, and start making some money if the stock continues rising. You know, so that's and there's not always going to be them every day, but they show up and then they're gone. It's like a flash in the pan. So, you know, get in the habit of, if you have any sign that the stock's moving against you, then just go after and go all the way down the list, all the way down to the, you know, the standard and then more. And, you know, probably not going to be there right away, but, you know, and then look for stocks that are correlated with GM and do the same thing, or even just to put a bullish broken wing butterfly on a market index. You know, it doesn't have to be the same stock. If GM's rising,
or even the ETF that it sits in, even the sector, sorry, that it sits in.
Yeah, precisely. Yeah. So that's another approach. Matt, let's go a little faster because I want to get into some trades. The two that
so these are the ones, the next two, Mike, are the ones that I'm really keen to keep an eye on this week. It's the IWM and the RUP. So they're our two industry trades. So again, having a bullish run, we'll be very cognizant of these. My management rules don't change here. On this trade, I've got my alert set for my short or my call. So 200 on the IWM. I'm pretty sure it was 2000 on the RUP. Yes, it was 2000, 2020. I'm happy to publish these trades on the sniper thread as well, so everyone can see them live. But again, same thing. Just waiting for a close above that short or in the last hour of the day. Walmart, Mike, is another one we saw took a good kick in the stomach last week. This is one that you highlighted, and it's had a really strong rally. Now with this, again, my rules don't change, but we've got our prior pivot point highs that are sitting right here. So that coincides with resistance and also very close to our shorts. So we'll keep our eye on these trades and see if we have to make any adjustments to them.
And let's not forget Walmart. They came out and said their earnings are going to be really crappy in about 2 weeks. And that resistance level at that pivot point right around 132 is super strong. And then you've got 135 above. So, you know, let it do what it's going to do. We got a plan. We'll batten down the hatches, and then
It even
again,
looks better here.
start looking for broken wing butterflies as well.
Mhm.
All right.
So that's that. I've got a trade, but you share yours first. How does that sound?
You want me to show mine first?
Yeah, I'll hand the mic back to you.
Okay. All right, let's do it. I got a couple I have in mind, but I was looking at Comcast. I like trading this way because Comcast got hammered. Remember, I just showed you that CNBC news. Let me take you back to it to remind you. Expect slower growth for cable companies, Barclays says in downgrades. So if we go over here, there's Comcast. Barclays downgrades Comcast to equal weight, lowers price target to 42. Earnings just happened. Goldman Sachs cuts price targets. Deutsche Bank just so it's been a rash of lowering of price targets. There are some maintaining outperforms that I don't like to see. Here's RBC maintaining outperform rating. So earnings was obviously not good, and we know that we all know because we're consumers. Most of us are consumers of media that there's a lot more competition to cable companies like Comcast. I'm just checking the news here a bit more. I didn't see this one last week because I was flying out of the jungle. Reports flat broad, so their subscriber growth hasn't grown. Revenue growth, subscriber loss going forward. Okay, there you go. See subscriber loss. All right. So there's more evidence. So what do you want to do with this? I mean, I would say let's, at the very minimum, since this is the sniper course or group, let's sell some call spreads on Comcast. You know, blood's in the water. Let's snipe. Single strategy. You can go to the call credit spread rankers right from searchers, single strategy, call credit spreads. And I don't know if there's going to be one, but let's take a look. So I'm just going to go after Comcast. The symbol is CMCSA and hit search. And there isn't any. All right. Oh, that doesn't stop me. Let me go back to a chart. Where would I want to sell? Well, I would like to sell at 54, please, but I can't get any money up there. So I've got to come down and figure out where my line and my closest I'd want to get. And on this one, you know, 44 is where I'd really like to get. 42 next, and then 40, which I'd be leery of doing at this stage, especially because nobody dropped their rating from buy to hold or anything like that. At least that I didn't see any.
How many days out?
What's that, bud?
How many days out are you thinking expiration wise?
Well, I'm going to go out 90 days from the scanner. And so one thing you can do in Thinkorswim is get some live data. So I can go out 80 days here, October 21st, and I can get a rough idea what the credits are. Now these are single point strikes, but you can see here at 40, I'm going to get about 50 cents. The 40, 42.50. That's about 25%. That would be that's a 2.5 point spread. So if we get 50 cents, that's 25% roughly. That's available at 40. And then if I come up here to 42.50, then I'm going to get 20. Well, that's 24 cents. That's about 10% roughly. So the way I'm figuring that out, as you can see here, there's 2.5 points between 42.50 and 45, and I'm going to get about 25. So that's 25 divided by 225. I used to be able to do that kind of math in my head, but I can't anymore. Probably because I say that's 11% right there. So 42.50 will give us about 11%. So that's just roughing it out. And then what I'll do is go into the scanner now, the tools, and I'll build it. So Comcast, and I want to go out to 81 days. This is Friday's date, of course. So we're just going to force the data, so to speak. So now I'll check slippage as well. Slippage is pretty good on this one. So I'm going to sell the 42.50 here, and then I'm going to buy the 47.50. That'll be roughly the same. Should be around 10% with the new credit that I see here. So if I go in here and I try to sell this 42.50, 45, and then I'll lift this up to 47.50, and I'll see what the current price is, and it's showing, let's say 30 cents. So here, selling 42.50, buying 47.50, and then here, same, sell, buy. Let's call it 30 cents, and I'm going to plug in 30 cents here. Because again, the data is not live yet for today, so I'm just force feeding this thing. So it's only showing 6% profit in the trade. So we'd have to get closer. Probability of profit on this one is 80%. So I'm a little bit dubious on this one. I think it's a little too close. And I'm not interested in, but personally, I'm not interested in 6.38%. So this would lean me more towards a condor or a butterfly. And that's where I'll take this one tomorrow as well. We'll take a look at putting a butterfly on it, a regular sideways butterfly, or maybe a broken wing, picking one direction or the other, or both, two broken wings if we can find them. One other thing I'll just quickly do, and I've demonstrated this before. If you go to stock rankers, let's go look for the train wrecks, and I'm going to look for bearish over the last 2 days against all optional stocks and indices. This is a really good scan, I think. So I'm looking for bear call spread candidates, or even butterfly candidates for that matter. And I'm going to take the top, let's just take the top 100. Put them in my stock list. And you can see some big tanks last week. Look at this, man. It's crazy. Maybe I should take more than 100. Yeah, let's take 200. There's a lot of train wrecks. So let me take, excuse me, let's take the top 200 of these. Hell, let's go 250. Why not? The top 250 of the biggest train wrecks from last week. Replace. And then go into searchers. Single strategy, call credits, and use my stock list instead. Long term, out of the money. And then I want my stock list here, the 250 biggest train wrecks. Go to my stock list and hit search. And then see what we got. Baba's on the list here. But Baba's earnings is in 6 days. Baba looks like it's in some, fairly tight free fall. Let's look at a live stock chart on Baba. Pretty flat for today so far. Below the 200. I mean, 125 could be good, but we might as well wait till earnings. It's in 6 days. Let that one go for now. Pinduoduo the same. KWEB wasn't on my radar at all. Let's see what this one's got going on. We got 23% probability. Return on investment potential at 73%, 74% probability. So I would lift this one up if I liked it. So let's take a look at pick 3. Short strikes at 34. 34 is here. That's a good place. It's a nice resistance level. This is China Internet. KWEB. I tell you what, I kind of like it up here at 35. 34 is good. 35 is above the 200-day average. So let's consider this one. Slippage is pretty good, 6%. Roku's on the list. I'm going to come back to that one. That's one I do want to talk about. But let's just see if this one looks any good. Let's lift it up to 37, 37-ish, depending on what the strikes are. So I'm going to edit the trade. October 21st, scroll down and see where the strikes are. October 21st. And I've got 1 point strikes all the way up to 45. So I've got plenty of room to go for, let's say, let's try 38 and 40. 8% at 38. All right, let's drop it to 37. Let's see what we get. My only hesitancy doing these is that I don't have my eye on the Chinese market, their Chinese news. And so I'm a little hesitant, but there you go. That's a good looking trade from a technical standpoint, offering 82% statistical probability of profit. Now let's see what we can get right now on this one. So I want to sell the 37.39. So I'm going to find the 37, sell, change the upper strike to 39. And let's see what it looks like. 39, offering 16 cents credit. So let's reflect that here. Sell for 16 cents. Take this down to 0. Same thing, doesn't matter. The spread itself is bringing in 16. It's 8.7%. So I like that. I think that one's okay. But again, my yellow flag is I'm not really watching China. There's so much going on there with COVID and lockdowns and social economic pressures and all that stuff going on that I'm
Nancy Pelosi's going to Taiwan. She could probably, get some information.
Yeah. I'll give her a call and see what she thinks.
Yeah.
Yeah. Now Roku is one that I have a bit more visibility on. If we take a look at pick 3 here. Yeah. Yes. How about a butterfly, anybody? Let's see what Roku's doing today. This is on my list for tomorrow. As a butterfly, it's up a little bit. All right. I like it. I'm going to be looking for a butterfly today. If I see one I like, I'll post it in the hedge fund thread. I've been doing a lot of these lately, and I love them. I'm killing it on them, quite honestly. Maybe that's why I love them. But a nice little butterfly here would be good. But how about selling at 100 on this? What's the news first off? Double downgrade. Underweight from buy from Bank of America. Okay. But then again, there's Kathy Wood. She's still buying Roku. No market ending. I would take what Kathy Wood says with a grain of salt. Don't back up the truck on what Kathy
Yeah,
Wood
she
said.
says she's buying because she's selling.
Is she? Yeah, probably.
That's what I would anticipate.
She says I'm buying, and then when people want to buy, she's selling hers. That doesn't happen, does it, Hank?
Oh no.
No, I don't think that happens. All right, so it's been hammered and underweight rating. Morgan Stanley, this thing ain't rising from here, man. It might fill the gap, but I like it at 100 and below. So this was the main trade I wanted to talk about today. So let me. There's a good deal of credit here at 20%. The short strike's at 85. Where do I want to sell? Well, I want to sell at 100. I don't think we're going to get enough money. So 100 is, see 100 here, resistance. It's a good place to sell, but that's the thing here. It'd be better to sell as high as you can get, but that's what would be perfect because that's super strong resistance. The round numbers around 100. 80, no way. Maybe 90. I'd say 90 is as close as I'd want to get. Or you just wait and you wait for Roku to perhaps fill this gap a little bit and then be ready with your little crab trap and grab a credit at a higher price than maybe is available now. And that's what I'm going to do right now. You can fish. You can fish here. So let's lift this upper strike. I just want to see what I can see it here better.
Well, you can do an Eloy Finoki.
Yeah, no, totally. The 100, 105 is going to give you 41 cents right now. The 9,500, 58 cents, 60 divided by 440. Yeah, that's not so great either, but let's try 95 and 105. See what's there as of Friday. Now we're going to lift that price up here, 95 to 105. So giving us $1. That's pretty good actually, if we can get $1. Let's do $1 here. 0. That's 11%. Probability of profit is 77%, but that doesn't take into account the downgrades and all the dire stuff. Break even is at 96. 96 on this chart is right up here. I like this one. I like this one. I'm going to go for it. So the current price available is now $1.03. Now let's try one more thing. Let's take it up to 100 and do 110. That's where I really want to sell. What can we get there? 71 cents. Okay, so if I edit this trade, maybe we'll fish for this one. You know, let the trade come to us. You're big on that, Hank.
Yes. I was looking, I just did a bear call filter on standard, and Comcast actually came up broken wing.
Oh, yeah?
Yeah.
Oh. Well, that would be even more better.
Hey, Mike, if you put this in as a day or the Roku is up on the day, if it runs up a little bit today, you might get a bit of a good fill.
That's what I'm thinking. That's the whole idea of the crab trap. I'll just set a price we want, and maybe it's $1, you know, or $1. And it's at 75 cents now. If we got $1 on this, that's an 11% profit on the trade and 80% statistical probability of profit. That's what I'm going to do here. I'm going to sell this. I was going to sit it out there as a GTC, and I'll let it sit there for a week because Roku may fill this gap. If it does, we'll definitely get filled. And I just don't think it's going to go any higher than that because of all the bad news. So let's go for $1. And this won't get filled. It may get filled today if we get a solid run, but we're 25 cents away. I'll just do one contract. Yeah, so let's do one contract. And $1 limit, GTC, and set it out there as a crab trap. Now, if I got that trade, I'd be so happy. If I took the 90, not as happy. So we're going to let it sit there. If it fills, cool. If not, we got plenty of other trades, including, as Hank's pointing out, the beautiful, delectable, delicious, sexy broken wing butterfly on CMCSA. Was that a bull or a bear, Hank?
It was bear standard.
Standard bear. Okay. The only thing about let's see what it looks like. Oh wow! Even at a standard bear, there's a credit here. That's Friday's credit.
Yeah.
Let's take a look here. Yeah. Let's see what this is going for now. CMCSA. No bulls on it? Hank, were there any bulls on it as well?
I didn't, let me see.
Yeah. I'd almost rather do a bull on this one if we could get one. 36. Okay, August 19. 36 is the middle strike. Buy it and change the strikes a bit. 37, 34.50. 37.
No bulls.
No bulls. Okay. Now it's showing a 5-cent debit. Let me look at the stock chart again real quick here. You could put this in for in a similar fashion. You know, get in the habit of, you know what, I want a credit, and if you give it to me, I'll take it. Otherwise, I'm gonna go find something else. You know, play hard to get. And a little GTC action here. Confirm and send. And send. And if that feels cool, I also, like I said, tomorrow I'm going to be looking for butterflies. I'll look at them today. If I see any, I'll post them in the hedge fund thread. And then, yeah, I had one on new mining, but I'm not as convicted on that one. So that's what I got. So we got a crab trap trade out there trying to grab a credit on Comcast, and Roku as well. So, didn't we do one on Roku? No, yeah, we did. So we got one on Roku. These are we're setting out traps. If we get filled, cool. If not, no worries. But keep an eye on Roku for long-term credit. This is really like, if you really want to improve your probability of profit, you know, find bad news or really good news and sell on the other side. Like blood in the water. The stock's in trouble. It's losing subscribers. Comcast, I'm talking about. It could rise a little bit, but man, and downgrades. It doesn't get much better. And a huge tank that dropped the stock. So those are the kind of trades you want to snipe, AKA snipers, which is what this is all about here. So Matt, let me pass it over to you, man. What you got?
I've got one on Clorox.
Bleach.
Yep. Bleach. Keep it clean. So this is the Clorox trade found with the scanner. It's selling the 160. I adjusted it to buying the 170. We're looking at 14% return on risk. We have our break even up here right over the prior pivot high, and well and truly above the highs of where it's been since February this year. When we actually look at this on a live chart in here, would be all the way up from when we had the gap down on earnings a couple of quarters ago. Now, it's also been downgraded recently. So whilst Deutsche Bank maintains a hold and there was a price raise, there's actually been a price downgrade as well at the same time. And then when you actually start going into, there was a report in here that actually showed, if I can find it, a number of analysts, and there was only one bullish analyst out of about 10 for the analysis on Clorox.
UBS
recently.
has it as a sell.
Yeah, so it did have a catalyst of bad news. There was oh, here it is. So if we look at this report here, so we've only got two analysts, one month ago, and that was, sorry, one analyst around a month ago that was somewhat bullish, couple sitting on the fence, and the rest of them bearish. So we've got bearish news, we've got a price downgrade.
No, can you pull the news back up? Because this is such an important point.
Sure.
If you look at the third news item down, UBS adjusts Clorox company's price target to 129 from 120, maintains sell rating. Those are rare. And UBS is one of the bigger analysts. Sell rating. That is massive. Massive. It's very rare to see a sell rating, especially on a company like Clorox. So that to me is the strongest of all the news, is that the sell rating is like a gift. And so why would that just keeps the stock more depressed, less likely to that upper resistance level.
Now, on the subject of resistance, there is one thing. The 50 is right here at 140, acting as support. But we do have resistance at 150. We've got the 200 at 153. And we've got 160, which is where we're short. So we've got 3 resistance levels to the upside, but we do have support at 140.
Yeah.
Matt, do you worry about the earnings again? We did this with General Motors and you traded through earnings. Would you do the same thing here?
Yeah, wouldn't bother me. Wouldn't bother me. So if you look here at earnings, yeah, it takes a run up, but it runs down into earnings. So this is where batten down the hatches comes in. So as we start approaching earnings, we're going to want to contract the risk. Some might want to just ride through it. Others might want to drop this. So this would drop 170 to 165, and we might fly the position. So we end up being relatively delta neutral to avoid being hurt too much in the event that the stock gaps, and give ourselves some time, give ourselves some breathing space so we can then adjust out if needs be. But taking these, when I first started these, Larry, I wouldn't take them through earnings. But now that I've developed myself and advanced myself through adjustments and how to trade them, happy to take them through earnings.
Yeah, I would also look at, I mean, you could wait 6 days. The IV will be gone. I mean, it is a potential landmine. The stock, the last earnings took a strong run. If that happened again, that same run from last time, then you would be battening down the hatches. For
You'd be
sure.
up here, you beat your break even.
Yeah, and then you could also lift up. You got 15% ROI you're playing with there. You could also lift it up to 165 to get further away. But yeah, I mean, that's Larry, that's definitely a potential outcome, is that you'd be in a, you'd be in a loss situation, battening down the hatches, mitigating risk and all of that, with a very positive earnings announcement, which quite frankly is possible in this market. You never know. Well, look at Walmart, shitty news, and the stock returns back from whence it came. And so, yeah, I think if you have any what's the word I want to say, any hesitancy, then don't take the trade. There's no need to. Comcast, we got other trades that aren't dealing with earnings. On this one, I think I'm with Matt. I would take it myself and then batten down the hatches if it came up, and I would butterfly for sure. I don't just contract. I always butterfly, and then if the stock goes back down, I'll just take off the one of the wings of the butterfly and make money and throw broken wings on it. So on this
Mike,
one, certainly I would
ask you something there.
Yeah, please.
Mike, can I ask you something there? You said first step would go to a butterfly. I'd almost thought I'd heard you say before, contract the strikes first, then go to a butterfly. So your
contraction is like no, I didn't. Certainly, contract and then butterfly for sure. Yeah.
Okay.
Contract and fly. That's the whole batten down the hatches thing. Newmont was another that I was looking at. I am playing around with this whole idea. We talked about it on Snipers Coaching last week. I'm playing around with this idea, and the idea is start with a condor. So on Newmont, as an example, you sell the credit spread, a bearish credit spread up top, a bullish down beneath. Now, why would you sell a bullish credit spread on a stock that's who's having inflation issue, a miner that is having issues with inflation? Well, the reason that you might do that is because of this, because of gold rising. The price of gold is rising, which should at very least temper any further downward movement in the stock. And so the idea would be to sell a put spread underneath and a call spread up top. Iron condor.
No, we can't see your screen.
Oh, that would be helpful.
There it is.
There's Newmont. And so it's going sideways now after that bad news. The reason it's going sideways, I believe, is because of this. Gold is a rising. So obviously a gold company is going to benefit from the price of their goods being, lifted, rising in price. So the idea would be using the scanner, find a bear call spread, maybe up here at 55 or maybe higher, and then sell a put spread underneath, generate an iron condor double wide. And then if the stock starts to move, then you can play with contraction on both spreads. You take the winnings as an example. If you had a put spread down here at 35 and the stock rose, you'd lose money on the bear call, but you're making money on the bull put. And then you contract up here, and then you lift up the winning put spread and get more credit.
What's
So
the
now that
IB, Mike, on Newmont currently? Is it rising?
Yeah, it's come down a bit. Let's just do it. I'm going to do that since I just talked about it. Why don't I just build it? So let me do that. Let's see if we can get a call credit spread or a put credit spread on this one. Long-term call credit. Okay, it's showing us one 15% right at 52.50. Let's see that 52.50. Where is it on the chart here? Okay, that's probably a little close. I would lift this up because we're going to do another one underneath. The IV, just to answer your question, is still pretty high. It's come down after earnings, but it's rising again. Okay, so
Right, 'cause we're kind of rising with an iron condor, correct?
yeah, but yeah, the IV is gonna hurt a credit spread if it's rising, and in two credit spreads certainly. But time will win that battle. I'm not too worried about it rising, at least temporarily. I want to have a plan to manage the directional risk and let theta beat Vega in the end. But there's something to look at there. Why is IB rising on the stock after it's gone sideways? Let's look at a current chart. Yeah, I like that it hasn't breached this low yet. It's just gone sideways. This is one of those trades where I start thinking butterflies. So this is the same trade. It's a nice regular butterfly candidate, but what this is really going to be is a butterfly with really a wide body. And so I'm going to edit this one and lift up we have current data now.
Yes.
Oh, good. Forgot what time it was.
It doesn't come up.
Pardon?
I did did I do short term?
What's that, man?
No, I did the call credit spreads with the new data.
Okay. Let's see. Yeah, IV's up. I'm going to lift this up. Now, remember, when you sell two credit spreads, you only have to cover one of them in the risk department. Only one of the spreads is counted as risk, so you over double your return. So you can get a little wider on these things. So if I look at Newmont at 55, that's a good level. That's a really good level. Resistance, support, resistance right there. Support, resistance, 55. So I'm going to sell at 55. And then let me check my strikes, October 21st. 55, 60. So I've got to go 60 to make it a double wide. Okay, so I'll take that risk graph. And then I look at the stock price. Let's call it 45. So my upper call is 10 points higher. So my lower put would be 10 points lower. Parts at 35. Edit the trade. And then I'm going to add the 35, check my strikes, October 21st, 35, 30. I'll sell 35 by the 30. I've got the middle 32.50 in between. So it's 35, 30.
Expiration date.
Yep, I'm going to get to that. Can't do it all at once. October 21st. Hey, I don't come to McDonald's and kick the broom out of your hand while you're working. I'm sorry, man. I know you don't work at McDonald's. It's Kentucky Fried Chicken.
That's right. Get it right.
So this is another approach here. That's a beautiful double wide butterfly, essentially, right? Now, the way I will trade this, for me, I like to sell it, convert this to a short-term butterfly, and then trade it, actively trade it. This is essentially a set and forget. So Newmont is having inflationary issues, production issues, all that stuff. So it has every reason to drift down, but gold is rising. And so if gold continues its rise, then Newmont could very well go with it. And so either way, if Newmont drops to here, then I'll contract this spread, take the profits from the call spread, and then butterfly. I demonstrated this last week. If you go through last week's hedge fund group coaching, I go through this in great detail with FedEx, and I did a back test with it, and I turned what would have been a losing trade into a winning trade on FedEx using what I talked about last week. So if you want to see more of how to adjust these, I'm not going to take the time right now to do it. We can do it perhaps tomorrow, or certainly again on Thursday for the group coaching. And more, I like this. Probability of profit, even for an iron condor on this trade, is almost 80%. On an iron condor now, 80%. And that doesn't take into account the ability to contract and do the things I talked about last week. So this to me was where I wanted to end up today on the Newmont mining. So it's all about gold, the company itself playing both sides of the fence, having a plan in the event the stock makes a hard run one way or the other, and being ready to mitigate that risk. So I'm going to go ahead and see if I can get this one placed, and I'm going to track it. And this will be a live example of how you can, step up the basic October 21 to step up the basic credit spread strategy, long-term credit spread strategy, and supercharge it. And that takes more work. If you're one that doesn't want to do adjustments, then you want to set it and forget it. Some of you are like that, and I certainly understand it, and I like it. But if you're one that wants to get in and mix it up a bit more, this would be a cool strategy. So I'm going to go ahead and sell the 55, and we want to sell the 35 put. Control click, widen the strikes a little bit. All right, and then underneath 35.30 underneath. And so this is going to bring in 67 cents credit, which is what we have here. And I'll do 2 contracts to get us up to 1,000 on this one, just under. This graph. Okay, so I know this is a bit more advanced than some want to play with, but I think this has got a lot of ability to adjust. Let's do 2. Well, I don't think, I know it does. No thinking, just doing. All right, let's go for 67 cents credit. Confirm and send, monitor. I'll take it down to 66 just to, I'm not going to go much lower than that. Well, we could take 65, but let's let that sit there for a bit. 66, edit, let me make it a GTC. So I've got 3 GTC orders in now. And if
Ding, ding.
any of them fill, I'll track. Yeah?
Yep.
Okay. So there's 3 GTCs we placed today: Roku, Comcast, Newmont. All 3 of these, ladies and gentlemen, are excellent, in my opinion, excellent sideways butterflies. If you want to play with that, we'll do this. We'll be doing this tomorrow. Is all you got to do is go into searchers, single strategy, butterfly, Now, again, you can still go after the broken wings. All right, that's fine too. The one I like the most, those, is the gaps. I like those the best. ROKU. Yeah, that's calling me, man. 70 is the middle strike. ROKU. So we'll do more of this tomorrow, but this is how you do it. You go into the searchers, single strategy, butterfly, run the search, at money put butterflies. If I hit search yet, there we go. You're going to get them. Go after the wider ones. Have this yellow column is ROI, max profit over max loss, and then you go find the wider one and get a strike that's close to the stock price. Here's one. I might even widen this one a little bit. So that's pretty nice. But I don't care about 150%. I just want to make money. So I don't worry about that. So I'll widen it. Oops, I didn't want to hit that button. Back this up. So I'm going to widen it. See what we get. By the 80. And it costs you more money. Your ROI will drop, but you'll get a wider one. Yeah, that's the kind of thing that I like to do. Break evens at 72 and 58. We got resistance there, the upper break even. The stock runs hard. We can track this risk down, and we've got the same. It's a butterfly. It's not a broken wing, but you have 2 point strikes up here, and then I heard a fill there, and 2 down here, so you can always contract. So that's the kind of thing that I like to do. All right, we've got an hour and 20. Let's see, anybody got questions, comments, anything they want to raise before we wrap for today?
Sue was just saying that she got 67 cents on Thinkorswim for that fill.
Oh, yeah?
Sure.
Nice. I didn't.
Well done, Sue.
Yeah, go ahead. Steve.
That about wraps it up for the comments.
All right. Yeah, see, I've got it in for 65, I got it in for 66. The mid is 65. Okay. Way to go, Sue. All right, everybody. Tomorrow, 3 p.m. Eastern is hedge fund. We're going to get into this world of butterflies in a big way. So have a good week, everybody. Thanks for joining us. It's going to be an exciting week, as it has been. And anything for Hank, you or Matt? Are you complete?
No, I'm good. I'm happy. I'm done. Have a great week, everybody.
All right. Cool. Sleep well, buddy.
No, I certainly shall.
All of you that
See
are
you,
down
everyone.
under.
Yeah.
All right, everybody. We'll see you soon. Hit the
Bye, everyone.
make sure you hit the sniper in the hedge fund live feeds. There's a lot of good information there. Bye, everybody. Much love.
Bye.